Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. I wanted to create a model that will give us some indication of how much impact increased gross automotive margins could potentially affect earnings, as I have a feeling we've barely seen the start of the economies of scale kick in, by which I mean these fixed costs are starting to dwindle more and more relative to the earnings. So just to be clear, I'm making a model to show the impact of what improved margins do to the company, whilst economies of scale are in effect due to the increased level of production. I really hope you will understand this and realise I am not creating some sort of projection or price target here. I'm just curious as to how much increased margins impact earnings. We will estimate that Tesla have achieved full capacity of the new factories by 2024. In reality, the year is not overly important, but I would expect it to be fairly close to that timeline. I'm going to estimate what I think the capacity will be for each factory. We'll be taking Fremont at 700,000, Shanghai at 900,000, Berlin at 1.8 million, and Texas at 2.7 million. In this model, we will also be using the Model S, X, 3, Y, and Cybertruck. The quantity of the Roadster sales is likely inconsequential in this model. The semi-truck opens up a myriad of complexities, so it makes it easier to remove. I fully appreciate the potential of the Semi and believe it will reshape logistics as we know it. So bear with me here, and let's just see what happens when we play with the margins at this level. We're also going to exclude the compact model. This is sort of like us discovering the most Tesla can get out of their current lineup more so before the compact model enters and with all the factories we have at present. Now we need to calculate the average selling price of each model. We'll be using global average selling prices rather than factory specific to reduce complexity. I'm using this model as an indicative way to explore impact of the potential margins I think Tesla can actually reach. Please do not take this as any kind of price target. I just wanted to know how big some of these profits could potentially be. Anyway, we can start by creating the model and we can run several simulations through it. The objective is basically to see what impact there is on profits at various automotive gross margins. Now, as we are at full capacity and we have estimated that this could be in excess of 5.5 million units a year, then I'm going to reduce the average selling price somewhat. Although demand is very high for Tesla, when we start approaching these numbers, then we may need to reduce prices to meet demand. Of course, no prices are adjusted for any potential inflation. In addition to that, it's highly possible that demand has reached much higher levels than what we see today. And remember, even the Y has a lot of untapped markets currently. It's only just been launched in the UK, for example, still not in Japan or Australia, and there isn't even the standard range available in the US. Plus, overall demand for EVs and Teslas continue to climb. With reduction in prices and more features available, then that will continue to escalate, especially if it also offers FSD. But it might not be just a demand thing, it might be a supply too. There may not be many other automakers out there left making many vehicles. Tesla might be dominating. It's just difficult to ramp up a business that sells products that lose thousands of dollars, isn't it? But I have a starting price of the Model 3 at $35,000 and the Model Y at $39,000. I'm using these as international averages, whereas these would likely be the US prices, and Teslas are generally more expensive outside of the US, except China. As for the Cybertruck, I'm going to stick with the original pricing, although it looks likely that there will be price increases. It sounds like the Tri and Dual Motor will be the most popular versions though. Now, as we are keeping an average selling price global, we do not need to factor in the different models from each factory. Instead, we can just break them down by models. Model S and X isn't going to have too much impact on our model here. It's possible Tesla have ramped up production of them somewhat, but I'm going to keep them at just 250,000 a year. On the earnings call, I inferred that they should be getting to a run rate of 20,000 each per quarter for the S and X sometime next year. So 250,000 a year by 2024 seems reasonable, especially when they start offering the lower cost versions. But they could even be using 4680 batteries by this stage, and demand might be higher again. But who knows, there could be competition from Lucid and Rivian too. Anyway, like I said, these models won't impact our simulation that much anyway. Model 3 sales haven't really been growing as much as Model Y lately, or much at all really, because Tesla is focused on ramping up the more popular, more profitable Model Y. But once there is ample capacity, then Tesla can start ramping up the Model 3 more. Imagine a Model 3 performance with structural 4680 battery pack, front and rear single piece molds, and all other improvements. Yeah, that's going to be a really cool car, an exceptional value for money. Therefore, I think Tesla can reach 1.25 million Model 3 units a year, especially when you have a starting price of $35,000. Remember, when you factor in the other Tesla savings, a $35,000 Tesla has a cost of ownership of the same of about a $15,000 ICE car, which more people will understand by this time too, that cost of ownership is not all about the initial price tag. Now, Elon tells us that the Model Y will be the best-selling car in the world, outselling the Toyota Corolla. The Corolla is about 2 million sales a year. That doesn't mean the Model Y will also have 2 million sales a year. It means it will beat 2 million sales a year. Therefore, I'm assigning 3 million Model Y sales a year. Maybe it could be higher, but this is how I've decided to break down our numbers. Tesla could sell 1 million Cybertrucks a year. What? 1 million a year for a car that ugly? I suggest if you still think the Cybertruck is hideous, you need to get your head around that, as it could cloud your judgment as to the success of this vehicle. This isn't just the coolest vehicle ever created, but quite possibly the coolest product that has ever been available on the planet. If the hideous F-150, and sure, if you were brought up with one as a kid, and I can understand the nostalgia you may have around such a vehicle, but from an objective standpoint, when you compare it next to a Cybertruck, then it's plain ugly inside and out. Minimization designed around first principles application ends up making the best design. So if the F-150 can sell 1 million a year just in the US, well, the Cybertruck certainly can globally. Anyway, I'm not sure the F-150 will even be around at this time, so there won't be much choice anyway. Look, maybe these numbers are a little high, and perhaps Tesla need to do a little bit of advertising even to get the number of sales. Elon hasn't ruled out advertising, Tesla just don't need to. Yeah, don't forget, advertising creates demand. Elon has said if he was to advertise, it would be to educate consumers about their cars, rather than something to manipulate consumers to depart with their money. On the other hand, you're all expecting Tesla to hit these run rates, and you aren't expecting a compact model before this stage, so how else did you expect the models to be broken down? When we plug these numbers in, we get an overall average selling price of $47,000. I know the current trajectory we're seeing is a reduction in the average selling price, but obviously with the inception of the Cybertruck, that's not going to happen as much as people expect. Right, that is quite a big deal. I'm not sure many people have considered that. Anyway, we do have a much lower average selling price for Y and 3. This is still slightly lower than Q3's average selling price, which was $49,000. And don't forget, if anything, the semi-truck will raise this further. This takes the revenue in excess of $250 billion. Let's run the first model with 30% margin as a base, and start from there. Now, of course, we are excluding energy and every other aspect of the business still. With 30% margin, this gives us $78 billion gross profit. That's a big number. Now, Tesla's R&D and selling general and admin have changed very little at all since Tesla is delivering twice as many vehicles today as back then, and this is all part of the economies of scale. We're going to pretty much double where R&D spending has been lately and take it to $4 billion for the year. SG&A, well, one of the major costs there is depreciation on all the capital expenditure. By this stage, the depreciation wouldn't be as high anymore, and in this scenario, we would also exclude any depreciation from any new factory if there is one in development, as it doesn't factor into our model. There isn't a lot of reasons for SG&A to really increase, but so be it. Let's just double it again and take it to $8 billion for the year. Stock-based compensation will still be in there, and Elon likely has a new compensation package too, but in reality, that should be shared across the other sides of the business too. You see, as the other sides of the business grow, namely energy in the near future, well, these fixed costs should continue to remain relatively low, improving operating margin. Operating margin is a good figure to judge how economies of scale is improving. This gives us an income from operations of $66 billion, which is an insane operating margin of 25%. Remember, we aren't factoring in energy or anything else in here, which also might mean our SG&A is too high as well. I'm not going to include any interest, as by this stage, Tesla most likely have positive net interest. Now, as there is less to depreciate here, so there will be a slightly higher tax rate than usual, coming in with a net profit of $57 billion. Now, when I increase the gross margin from 30% to 40%, then although that's only a 33% rise in margin, i.e. 33% of 30% gross margin is 10%, add the 10% onto the 30, and we're at 40% margin, well, the profit has now increased from $57 billion to $80 billion. That's an increase of $23 billion. The costs remain the same, as we aren't even increasing production numbers, solely improving margin, likely through Tesla incorporating their own in-house batteries. But $23 billion more profit is a 40% increase in earnings. You see, as the economies of scale kick in, 33% increase in gross margin gives 40% increase in earnings. And as Tesla make more cars, these will improve further. This is now generating a 35% operating margin. Now, we know Tesla can easily reach 40% margin with their new processors and batteries. And sure, there are tons of tweaks and alterations on the production lines Tesla can also make to improve margins here and there, along with more vertical integration. But is there any other major development we've left out that could improve margins significantly higher again? Yup. Who guessed it? FSD, right? That's a really high profit margin element to Tesla's business. If we're saying this will all be happening around 2024, I assume the vast majority of you would agree that there is a high probability that FSD would have reached level 5 autonomy by then. This means two things. One, being Tesla no longer has to defer any FSD revenue and can realize 100% of the revenue. It also means that adoption rate is likely a lot higher. Yes, a lot of drivers may be using the subscription model, but we will take a value of $10,000 per FSD vehicle. The subscription model likely has more value over the lifetime of the car anyway. How about we add that in at even just 50% adoption rate? Then that's a further $27 billion of revenue. Now, if we add that figure onto our auto gross profit, we're at a total gross profit of $131 billion. It also brings our overall margin for the vehicles to over 45%. Right, yeah, 45%. How is anyone ever going to come close to that? Obviously they're not. Tesla is out in a league of their own. The earnings come to $103 billion. Now, if you're uncomfortable thinking Tesla is capable of selling over 5 million units a year, then if you allocated $3 billion of that into advertising, then that should do more than boost sales to increase your confidence to reach that figure. Now remember, this is not an official forecast, but just for fun, we could put 50 times multiple on that earnings figure of $103 billion and quite easily come up with a $5 trillion valuation. Not bad for 3 years' time. Oh, and we're only at 5.5 million cars. We have 20 million cars a year to come. A figure I think is also sandbagged. Oh, and potentially robotaxis. Oh, and then energy will be at least as big again. Oh, and robots bigger than that again. Oh dear, I've increased my conviction again, haven't I? Right, looks like I'm going to have to go back into my account and get another one of these leaps then, doesn't it? I usually wait for dips, but I'm feeling a little bit more hasty right now. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.